Okay, so last time we discussed about the fringe benefit tax, fringe with benefits. Anyway, we'll go now to section 34, the allowable deductions. Okay, you just remember that this is actually if you're earning your compensation income arising from employer-employee relationship. There's no other relationship for personal services rendered. You're not allowed to claim allowable deductions under this section. Okay, if you're earning pure compensation income, those who are allowed are the ones who like the self-employed or doing business. For individuals, this is Section 24A. For the individuals, Section 25, aliens. Section 26, general professional partnerships. 27, the corporations, PNC, and 28, foreign corporation. But the idea here is that, well, for pure compensation earners, if you have a job, okay, and you also have a business, then you are allowed to claim allowable deductions on the business side of it, not on the what you're allowed when you earn pure compensation income is just the additional and the personal and additional exemption. If you're married for up to four, we'll discuss it later. And okay, we'll discuss about the expenses. You just take note of the ordinary and necessary keywords here. The expenses must be ordinary and necessary for the trade or business or the expenses of professional. It must be ordinary and necessary. Ordinary and necessary in the pursuit of your business or in the conduct of your profession. So there are these salaries, you have this travel expenses for rentals, the power, the light, power, and water, etc., etc. And it is, oh, my favorite, reasonable allowance for entertainment, amusement, and recreation. You're allowed, if I remember it right, in Revenue Memorandum Circular, you're just allowed for, this is what we call the representation expense. Okay, I think it's just 10% of the of your gross income. But there's this limit set by the BIR. It cannot just claim so much of the expenses because there's this provision here. If you incur that expense for entertainment that is contrary to law, especially on morals, that expense is disallowed. Okay, so you remember the katong inaatuan nyo sa highway, the one in front of the VLO office right now. So if you come home, you bisita ang VLO, and you'll notice the establishment not really in front, but somewhere there. And you know that. You've been to there. But that's the idea. Okay. Ordinary and necessary expenses in the pursuit of the trade or business or the profession. And okay, this one, persons allowed, resident citizens, resident aliens, non-resident alien engaged in trade or business, partners, domestic corporation, proprietary educational institutions, GOCCs, subject to tax, resident foreign corporation. The keyword here is the ordinary, as I've said. And the all events test is also employed here. Okay? You remember the all events test? I repeat, an example of that is what? Your light, your electric bill, your consumption in December. You pay that usually in January, but you record the expense in December, not in January. Okay, that's the all events test. And the substantiation rule. Okay, the this is found in subparagraph D of section 34. You cannot claim deductions if you cannot substantiate your expenses. So in the case of Bunting Pawn Shop versus CIR, the Bunting wasn't able to produce the official receipts that he paid for, the evidence that it paid for something for, well, in this case, it was like a rent expense. The Supreme Court or the BIR disallowed the withholding tax returns, even the lesser certification and contract of lease, because that is not what the law requires. It should be an official receipt or an invoice. Okay. Right now, also the PIR disallows the use of thermal paper for invoices or official receipts. So just remember that. So you have to substantiate your expense with what? Official receipts. No other. There is also this provision. Okay, this subparagraph 2. Expenses allowed to private educational institutions. You remember the discussion which I earlier about private educational institutions under section 27. They are along with the private hospitals, non-proprietary hospitals, okay? But only the educational institutions are allowed to have this option. Whenever they incur expenses which are otherwise it can be treated as a capital outlay, you have this option to deduct it outright in the calendar year or the taxable year, or they may treat that as an asset and deduct the depreciation of that asset later on. That is only applicable to educational institutions. Hospitals are not mentioned here. So you remember that, okay, the reason for that is, well, the medical facilities, whenever the hospital buys, they are expensive. Okay, so only as compared to educational institutions, what are the machineries, the computers and everything, but compared to hospitals, the capital outlays of private educational institutions are not that much. Okay, so they are given the privilege of having this option. Okay, for the interest, you have this related party rule. The idea here is whenever you loan money from somebody or from a bank or a financial institution and you pay interest, that is an expense. Okay, so you can claim that. And you just take note of the rule here. But there is this, what if, okay, kinsa man ang sikag pangutang sa imong mama, you loan money from your mother, and you are not allowed actually to claim interest expense. Your mother won't even impose interest for the forbearance of money. Kaya magulang ra mo sa pangay. You don't even pay that. Or even from your sister or from your brother. There's no interest expense there. Even if your brother would claim that interest expense. Okay? That's related party. And there's this optional treatment of interest expense. At the option of the taxpayer, interest incurred to acquire property used in trade or business of a profession may be allowed as a deduction or treated as capital expenditure. This is the same with this one. But this pertains to interest. Okay, the business or the profession. Okay, interest incurred to acquire property. You may treat that because that interest forms part of the cost of the asset. Okay, according to the general accounting rules, generally accepted accounting principles. But under our tax laws, for purposes of taxation, you may treat that also as an expense. Right. Okay, just remember that. And taxes, well, normally you can claim as an expense for the taxes that you paid, except income tax under this title. So you are not allowed to claim an expense or reasonable expense for income taxes you pay to the BIR. That's not allowed. But what are the allowed? Well, the local business tax, a percentage tax, etc., etc. You are allowed to claim that. You just read the exceptions here, okay? And there is the tax benefit rule. Okay, what is this tax benefit rule? The tax benefit rule is when an item was previously considered as a deduction, but was subsequently recouped or recovered, such item must be reported as part of gross income for the year that was recouped or recovered. An example of that is what? A tax refund. bad debts collected, and my favorite, abandoned well re-entered and production resumed. I don't know what the well is, but that's the idea. If okay, you paid taxes and there is this refund, except the income tax. Okay, there's this refund, or maybe even the income tax. That's the tax benefit rule. You benefited from the tax. Well, income tax because you did not benefit from the deduction. It's not. There's no tax benefit here. And bad debts. Well, you've written off some debts, and later on you collected that. It should form part of your gross income. And abandoned well re-entered and production resumed. Okay. And you just take note of that. You take note of paragraph C 2 to 7, and the NOLCO, and charitable and other contributions. You take note of the optional standard deductions, and paragraph K. This paragraph K, okay, this one we'll discuss, for another video lecture because there are lots of provisions here, but we'll go to that one by one. We'll go through that one by one. But I want to discuss right now this one because in practice, okay, in real practice, this is the favorite of the BIR. They want to look into the income payment of the company, the expenses. Whenever they claim expenses or expense, the idea here is you should withhold the corresponding tax whenever you pay something a to to another person or to a company. Say, for example, the company paid for the gasoline. Okay, they bought like so much barrels of gasoline in the amount of 1 million. And there's this table. You don't have to memorize. I can't even memorize that. You have to withhold a portion of that for the tax. Okay, the 1 million. But if the company, okay, did not withhold the tax corresponding to that income payment of 1 million. Say for example that the withholding tax should be 100,000 for the 1 million. So the company theoretically should issue a check for 900,000 and issue a creditable withholding tax certificate for 100,000 to complete the 1 million. And the 100,000 should be withheld by the company and remit that to the BIR. Okay, and the gasoline expense, if you remember, that's a necessary and ordinary expense in the course of the business of the employer or the company. What this section K provides is that the gasoline expense, the 1 million gasoline expense, would be disallowed as an allowable deduction. So there's this double whammy here. You will pay because there's this revenue memorandum circular by, I think it was issued by Commissioner Henares, that even if you paid later on the withholding tax for that 100,000 later on when you are assessed, still that 1 million would be disallowed. This is the import of paragraph K, section 24. Whenever you earn or whenever you pay income to somebody, you should withhold. And that if you fail to withhold the corresponding tax, then that expense that you are claiming for as a deduction would be disallowed. Okay, that's paragraph K. And this one, advertising, I think this was asked 2 years ago. Is general foods. There are two kinds of advertising: stimulate the current sale and designed to stimulate the future sale. Okay. Second type, future sale, involves expenditures incurred in whole or in part to create or maintain some form of goodwill for the taxpayer's trade or business. If the expenditures are for advertising of the first kind to stimulate the current sale, then except as to the question of reasonableness, okay, there is no doubt such expenditures are deductible as business expenses. If, however, the expenditures are for advertising of the second kind, then normally they should be spread out over a reasonable period of time. Because this is goodwill, it's kind of an asset class, okay, and you would amortize that. That's an accounting term. Just remember, if the advertising is for to stimulate the current sale, then that's allowable deduction. If it is designed to stimulate the future sale, just to have a goodwill, there's no promo or just balandra lang silang apping ni whoever, and there's no whatever, not to stimulate the current sale, then it should be spread out. You cannot claim that as a deduction outright for the expenses that you've incurred. Okay, so that's section 34. The idea here is, again, I repeat, pure compensation earners are not allowed to claim allowable deductions. But for those who earn income from business or the exercise of profession, and also for domestic corporations, GTPs, they are allowed to claim allowable deductions under Section 34. And even if you have a job and you earn also income from your business, you are allowed to claim deductions under Section 34 insofar as the business is concerned. Okay, and the keywords are ordinary and necessary. All events tests are what? They are. It is recognized or it is applicable also. And substantiation rule. You remember that only ORs, official receipt, official receipt or invoice, and the related parties. The idea, you cannot claim interest expense if you loan money from your mother or your brother. And there is this also the interest expense treated for. Okay, let's put this one for expenses allowable. Let's transfer that here so it would be clearer. Okay, there you go. For private educational institutions only, hospitals are not included. Tax benefit rule, you remember that for you are allowed, or you should report that as part of your gross income if you recovered the the tax or the bad debts or abandoned well re-entered and protection resumed. Discuss the other provisions, but we'll just browse through that. Maybe some I will discuss. And okay, that's about it for the part 1 of section 34 on allowable deductions.